Hello, my name is Justin Carbonell. Thank you for reading my article on shareholder yield. As I wrote about in the article, the term shareholder yield captures the three ways in which management of a company can distribute cash to shareholders. They can pay dividends, repurchase stock, or pay down debt. So by combining dividend yield with buyback yield and debt reduction or pay down yield, we now have a metric that allows us to see across all stocks in the market which companies are returning cash to shareholders. By calculating shareholder yield, we now have a way to score and rank stocks by shareholder yield, and we can combine this metric with other fundamental factors and use it as a scoring mechanism. It's important to point out that shareholder yield is not projecting a yield or an expected return on a stock you're looking at, but rather it's a formulaic way to identify stocks that are returning cash to shareholders and those that are not. Finding shareholder yield online isn't always easy, although on Validea you can find it in our Guru analysis. So let's take a look. Here I typed in a ticker symbol, and it brings you to our Guru analysis page. First, you see a table with a list of scores. What you can do is click down into any of these strategies. Now, even if you're not a subscriber, you can still get access to this fundamental variable table, which is where we display shareholder yield. Validea calculates this daily based on the three components used in shareholder yield. And as the data changes, so as dividends go up or down, as shares get repurchased or issued, or as the company retires or issues debt, our figures will change and reflect this. Let's look at a few of our Guru models that incorporate shareholder yield as one of the key investment criteria. On Validea, we have 4 different models that take shareholder yield into account. The Value Composite Investor, based on James O'Shaughnessy's work in What Works on Wall Street. This is a value strategy that looks for inexpensive stocks using a composite of value factors, and shareholder yield is one of those. The Shareholder Yield Investor model, based on the book Shareholder Yield, A Better Approach to Dividend Investing, written by FABER. This strategy looks for companies returning cash to shareholders via dividends, buybacks, and debt paydown, and incorporates other quality and momentum metrics. The Multi-Factor Investor model, based on Pim van Vliet, and his work in his book High Returns from Low Risk, A Remarkable Stock Market Paradox. This is a multi-factor model that seeks low volatility stocks that have strong momentum and high net payout yields. Note that this model is using net buyback yield instead of shareholder yield. Net buyback yield is the dividend yield plus buyback yield. And lastly, the Millennium Investor model based on Patrick O'Shaughnessy's book, Millennial Money. This uses shareholder yield, and it's a strategy that looks for inexpensive stocks with high shareholder yield and high returns on invested capital. So on the Validea website, you can go into each of these models to see how any stock scores. So here we are looking at the financial company MetLife, ticker symbol MET. This is not an endorsement or recommendation for MetLife, but instead an example of how each of these stocks rates a particular model. If we jump between models, we can see that shareholder yield is used differently by each. The multi-factor model uses part of shareholder yield, net payout yield, which looks at dividend yield and buyback yield. The Value Composite Investor model looks at shareholder yield along with 5 other valuation metrics to create a composite score, and only the top 5% of stocks in that universe are considered the best investment opportunities. The Shareholder Yield model, based on FABER's book, looks at shareholder yield along with a host of quality and other valuation and momentum factors. And the Millennium Investor model, based on Patrick O'Shaughnessy's Millennial Money, uses shareholder yield and looks for inexpensive stocks with high returns on capital. If we wanted to utilize shareholder yield as a way to generate new potential investment ideas, what we can do is leverage Validea's Guru Stock Screener. Let me show you an example. Let's say we want to combine the 4 strategies we previously looked at. We can screen for stocks that meet the Value Composite Investor, Shareholder Yield Investor, Multi-Factor Investor, and Millennial Investor models simultaneously. In addition to that, we could screen on a particular strategy that doesn't use shareholder yield, but then add in this fundamental factor so we can use it as a sorting mechanism. So for instance, let's say we wanted to look for growth stocks. We could use the price to book to growth investor model based on Partha Mohan Ram, which is a growth-oriented investment strategy. We can then add in shareholder yield as an additional fundamental criteria. We can sort the list by shareholder yield to see which stocks score highest according to this value. Thanks so much for watching this video. We look forward to seeing you on Validia.